everyone, welcome back to Upside Down Data. I'm Joe. I'm joined here today by my friend and co-host Mark, and also by our good friend Jay from Daily Crypto Analysis. We're going to continue our conversation from a couple of weeks ago about the crypto markets. We're going to take stock of where we are right now and share some thoughts with you all. So we're excited to get into it. But before we do, actually, we have an announcement that we're pretty excited to share with you all that I think will be welcome news to a lot of people in our audiences, which is that the three of us together in collaboration are working on building a website, which is going to host not only your favorite risk indicators, the DCA index and the upside downside potential indicator, but also lots of other data that's going to be useful for you in navigating these markets. So we're really excited about this. We're going to keep you posted on the ETA for when this website is going to drop. It's in development right now. And is there anything that we want to tease for folks about the website? What do you guys think?
Well, I think, like you said, it's just going to have basically we have pretty grand plans for it. And at the start, we're going to basically have a place where we're showing the indicators that we have, the upside downside risk indicator, as well as the DCA index model, as well as some of the other models that you guys have. But we, have plans to expand that into much more. So I don't want to give it all away yet, but I think there's going to be a lot on the site to be excited about. So, in the coming weeks, we'll start talking about more. And I think you guys have a survey that you'll be putting out, right?
We do, yeah. So, this is going to take a few more weeks. We'll keep you posted about the exact ETA for the website, but to tide you over in the meantime, we are going to make the upside downside potential indicators for Bitcoin and Ethereum available to folks. So the way that we're going to do that is by putting out a survey, really brief survey. It'll only take a few minutes to complete. And we're going to post that on Twitter and also in the descriptions for our videos. And that's just going to give us an opportunity to learn more about you all. And so that we can improve our content and also make some choices about the website based on what you guys tell us in terms of feedback. And as a thanks for doing that, we're going to give you a link to access the Bitcoin and Ethereum UDPIs for all three timeframes for the next couple of months. And so the exact dates we'll announce in the next couple of days, as I mentioned on Twitter, as well as here on YouTube. But that'll hopefully, give you some useful information while we work on getting the site up and running.
Yeah, and the only thing I would want to add is, really make sure if you get the survey, make sure you fill it out, because the more information you give us as to what you're interested in seeing on the site, I think it really helps us to know what we should be focusing on, because we have our ideas, but at the end of the day, you're the individuals out there that we are hoping to fill the needs that you have as investors. So your opinion ultimately is what matters.
Exactly. So we're excited to hear from you guys, and also just to start giving you access to this information. But with all that said, why don't we dive in and talk a little bit about the markets? The place to start probably is the elephant in the room, which is that there's a war that just broke out, as I'm sure you're all familiar. We're not experts in war or international relations or politics, so we're not going to pretend to be or try to give you our opinions about all that kind of stuff. We're going to stay in our lane and focus on what we know, which is the markets. But of course, the situation has lots of implications for the markets, and so we thought that would be a logical place to start. There are crypto connections in this situation. I mean, I've seen this referred to as the first crypto war. And one thing that you might not be aware of is that Ukraine is one of the leading countries in terms of adoption of crypto. It's the number 4 country, according to Chainalysis, in terms of crypto adoption, and the number 1 country in terms of adoption in Europe. So Ukraine is a big player in the crypto space, and so this could clearly have ripple effects and implications for crypto. And so we thought that would be a good place to start. So Jay, how do you think about what the implications of this situation might be for crypto adoption, and anything else that's coming out of this situation that's related to the markets.
Yeah, I mean, I think, just to echo what Joe said also, the fact that we're talking about crypto, we in no way whatsoever mean to trivialize the events that are going on at the moment. We understand this is something that's way out of our league. None of us have any, true experience, and we can't truly relate with the tragedy that's happening right now. So us talking about crypto is not meant to sort of, speak down upon what's happening. We understand that this is absolutely a tragedy, but we are here to discuss crypto, and that's what we do. So we felt that it was, in our best place to continue to do that, as I think there will be impacts upon the crypto space. So I'd just like to put that out there first, that this in no way is attempting to trivialize the tragedy. So to the question then, in my opinion, it's really tough to say how this is going to impact the crypto space. I think this is a unique situation. In fact, it may even be unique for more modern markets. I don't think we've seen anything quite like this, on this type of scale, at least as far as I can remember. Nothing like this has happened. Now, there have been wars that have occurred, but nothing to a point where we're seeing essentially two modern, powerful nations fighting one another. So as far as crypto goes, like you said, Ukraine is one of the top players in the crypto space. So I think as far as the way it's going to affect markets, that's sort of yet to be seen, because we don't know exactly to what extent infrastructure is going to be affected in Ukraine. We don't know how markets are going to react to it per se, and I think that just sort of adds to the overall climate of uncertainty at the moment. Like, we have, just if you completely removed this situation from the markets, you already were in a climate of extreme uncertainty before you even were hearing about the Ukraine-Russia situation. And so this just sort of piles on top of it. So I think it comes down to the fact that we're in a climate of uncertainty, and there's, simply put, that's exponentially increased in the past few days. So my thinking is, markets will tend to overreact to things at first, and I think we sort of saw that play out when it was announced that Russia had officially invaded Ukraine, where the markets crashed down to what it was around 34K for Bitcoin anyway. And it's recovered since then. Now we're trading actually near 40K even. So I think you're going to continue to see the market sort of in an uncertain place and oscillating wildly in reaction to sort of any news that comes out. So, I think volatility is going to be the name of the game going forward, at least for the foreseeable future.
Your thoughts, Mark?
Yeah, so I want to pick up on the idea of uncertainty, because I do think that's an important element of all of this, because I think in no small part, at least in my opinion, the drawdown we've seen ever since November has been partially driven by a lot of uncertainty, right? Uncertainty about inflation, uncertainty about how the Fed was going to react to inflation, and then, and also even back then when the Omicron variant was coming out, uncertainty about how that was going to affect things, and then more recently with the situation in Ukraine, uncertainty about was there going to be an invasion, what was going to happen. And so one possible interpretation of the bounce that we saw across markets kind of ending off that day after the invasion happened was that at least one area of uncertainty got partially lifted in a sense that, it's a big question, would an invasion happen or not? There was an answer. I mean, it was an answer that a lot of people weren't hoping for, but it was an answer. And so that kind of gave markets something to stand on. And so that's, I think, for me, the big question moving forward. Obviously, a war is very volatile. It's hard to really predict exactly what's going to happen. But I think in some ways, the things that could really lead markets to sell off again would be if something really unexpected within the context of the war does happen. So if the war stays relatively confined to the kind of parameters it's in right now, then markets probably have already priced that in to some degree. But if there be some kind of contagion effect where the conflict would spill out into other areas, something that the market doesn't expect, that could have potentially negative consequences. So I think that's partly the way I'm thinking of it, is that if things kind of stay within expectations, I think that the markets are probably already pricing in most things. But if something really happens that creates a whole other level of uncertainty, we could see a drop down from our current levels. So that would be my first thought there. Joe, did you have another take on the situation?
Yeah, I'll bring up something maybe a little bit different. I think that you guys both make good points. One thing that I've been thinking about is kind of the conversation around crypto in the context of this war. Non-crypto folks have been skeptical of crypto for a long time. And I think one of the arguments that you hear, one of the criticism that you hear a lot of the time about crypto is that it doesn't have any intrinsic value add, that it's essentially a reflection of the greater fool theory. It's purely speculative. People are just buying so that they can sell to somebody later for a higher price. I wonder, and I'm just completely speculating here, but I wonder whether this event is kind of putting the lie to that argument to some degree, because both players in this conflict have very real, concrete applications of crypto. We've been seeing this both on the civilian level, people who've been leaving Ukraine, taking their private keys with them after they lose access to their bank accounts. That clearly shows a unique use case of crypto, which is something that crypto natives have been arguing is part of the value of it for a long time, but people have been skeptical of this. So I think that there is a kind of demonstration that's happening there. Also on the Russian side, there are use cases. So this isn't about making a judgment about what's good or bad. The point is that Bitcoin and crypto don't take sides. They do what they do, and I think that we're seeing that they have utility, regardless of how you feel about the particular uses to which they're being put. And so, one potential outcome here that I could envision would be that it would change the conversation around it a little bit. It would make people potentially, again, just speculating, potentially a little bit more serious about the discussion about crypto, about what its capabilities are, what its utility is, and how we want to incorporate that into 21st century society going forward. And so I wonder whether the conversation about crypto is going to get a little bit more serious. This isn't about price action. I think you guys covered that territory pretty well. But it's about the reputation of crypto, and that obviously could have implications for adoption. If people become dissuaded from the greater fool interpretation and from the total speculation Ponzi scheme type of critique, which I think we all agree is not a sound critique of crypto, then that could get us to a place where we're having more constructive discussions about cryptocurrency. And so potentially a hopeful silver lining, although again, that's obviously not to trivialize the cost that could come at. So that's another thing that I've been thinking about.
Yeah.
Want to weigh in?
Well, I just think to your point that you just mentioned, and again, I have no way of confirming this. This is not firsthand information, but I've been reading about individuals, not being able to access their bank accounts, or having greatly reduced withdrawal limits both in Russia and Ukraine. And I think this just sort of speaks to that. When you're talking about crypto, that is something that no one is controlling. No one can stop you. You're not relying on the bank to be able to go and get your money out. It doesn't matter if there's mass panic that, everyone's pulling their money out of the banks. So the banks, don't have the reserves to meet your demand for money at whatever time, in the setting of a crisis. When you're talking about crypto, it's just there. That's it. There's no questions asked about it. No one has control out of whether you take all of your Bitcoin out or none of it. No one can control it. No one can touch it. Granted, in the setting that you have it on, off of an exchange, because obviously if it's on an exchange and someone's in custody of your crypto, but if you have it in your own wallet, it's yours. That's it. There's no questions asked about it. So I think that sort of speaks to what you're saying, where it's demonstrating to you, in a modern scenario where people can't get their money out of their banks, and with crypto, you don't run into that type of issue. So I think it does speak to sort of the use case or utility of crypto versus a traditional fiat currency.
Yeah, and one more relevant point along those lines, and I can't totally verify this is just in a news article I'd read, that apparently in the Ukraine, the local kind of one of the more major crypto exchanges, actually a lot of people went on to buy Tether because they couldn't necessarily, or they wanted to have a safe haven. They didn't know what was going to happen with their local currency or if it was going to hold its value. They wanted to put it into something more potentially stable. And it was just interesting that that's where a lot of people turn to. And in fact, I think it was to such a degree that Tether was trading at like a 10-cent premium above the dollar, just because there was so much demand for it. And so in some ways that might also show the maturity of crypto if it's that known. And this might also go to what you were saying, Joe, about Ukraine being such a high adoption place if a lot of people know about crypto. But I thought it was notable that that's where people turn to. And in some ways, that's kind of a unique aspect of crypto because it's a pretty quick way. Like you can't get your hands on gold, immediately, especially not physical gold. But crypto, where you could get it, put it in your own wallet, where you have the keys, your own custody, it's very quick, very easy. So in volatile situations like that, it kind of made sense that might be a place where people are turning. So that's just another interesting data point. Again, I haven't verified that beyond the news article I read it at, but it was just interesting to see.
And gold has multiple modern historical examples of being confiscated by governments, including the United States. So this isn't, I think the whole discussion about, what are you going to do? You have to move around gold. It's a physical asset that you have to, there's a cost associated with moving. Bitcoin is instant. You can transfer it for, you can transfer billions of dollars. You can transfer billions of dollars of crypto for just a few dollars. And that's, try doing that with your fiat, moving around a few $billion for for $3 on the network.
You need to rent trucks. You need security.
Exactly.
A whole different ballgame.
Yeah.
So it seems like this is, crypto is maturing. It's kind of a trial by fire, and it's not what any of us would choose because of the cost for human beings. But it does seem like this is part of the process of crypto maturing and kind of finding its place in society.
Yeah, I think it just, conflicts will arise around the world. And I think, this just goes for the future to show what sort of security, or at least what sort of insurance crypto provides you with that, other types of currency or commodities just simply don't.
Yeah. Well, okay, so let's kind of transition and dig more into some of the things that you each brought up in the earlier parts of your responses there, which is about price action specifically. We had that capitulation when the invasion was announced on Thursday, and that was one of the most volatile days in a while. And it had some of the hallmarks of a capitulation. There was big volume. There was a lot of fear and uncertainty. There was a huge wick back up to the upside. And it had recovered its entire move, Bitcoin, and then some within about 24 hours. So it was like, if you were watching the markets, it was a heck of a day. But so the question is, do you think the bottom is in? And maybe to put that same question a little bit more generally, how are you thinking about risk to reward right now? And I'll start with you, Mark, on this one.
Yeah, so I think that's kind of a question that's on a lot of people's mind. I mean, one thing that was notable just from a kind of short-term market structure perspective was, though we did capitulate, we didn't actually wick down to the actual bottom we put in January. So from just a very short-term market structure perspective, that's obviously what you'd want to see, right? We didn't even on a wick standpoint, we did not put in a lower low, which was notable, even though this was in some ways, you might have expected a bigger capitulation on this news than whatever drove that kind of wick down in January, which is more just kind of general market uncertainty in a more macro structure. And then the fact also that we did have such a high volume day that closed green did suggest that there was enough buying pressure to really overcome all of that fearful selling that kicked off earlier on in the day, which was in some ways hopeful. So, putting that into the context of some of our other indicators, our upside downside potential indicator and also Jay, your DCA index are generally showing this as being a relatively low risk zone for Bitcoin specifically. So when you put those two things together, if I had to pick a side, I would say that in hindsight, most likely now will have looked like a reasonable acquisition zone. Obviously not financial advice or how you'd exactly do that. There are a lot of different opinions of how you might want to navigate these situations. But if I had to pick a risk reward side, I feel like I kind of would have to say that it would be more in the favor of acquiring rather than selling at this current point. Not to say that this has to be the bottom. I think in some ways the market's in a bit of a tenuous spot right now in terms of, news could send us either way. I feel like it to some degree. I think there's a lot of money on the sidelines where some kind of bullish catalyst coming in could send price up, both in equity markets and in crypto. Just so people are just kind of waiting to see which direction the market's going to go. But at the same time, if something happens that goes the opposite direction, I think another capitulation could certainly happen that might actually drag us down to those lower price levels that we can't really ignore as being a possibility. So that would kind of be my saying. I'm not going to say hard on one side versus the other, but I feel like if I had to take a pick, I'd be more erring on the side of there being greater reward than risk at these levels. But that's just my take. Jay, I'm curious if you have another perspective.
Yeah, so in general, personally, I don't really trade on the short term ever. So everything that I'm discussing or looking at is essentially on longer terms. And that doesn't mean that that's, the right answer. That's just how I'm doing it. So in the short term, I definitely think, like I said, I think there's a lot of volatility associated with the markets right now. Like you guys have alluded to, you have the Ukraine-Russia issue, you have the Fed, you have money printing, you have COVID still. I don't think we're necessarily out of the woods on that yet. So I think there's just all over the place, you have volatility, and markets can be highly unpredictable when you're in situations like that. So in the short term, as far as the question of, is the market at the bottom right now? Quite frankly, I would have to guess that, well, let's put it this way. Anytime that we've seen a big move to the upside with Bitcoin, and again, I'm referencing historical data here, and obviously that never has to happen again in the future. But anytime we've seen a big, large move to the upside, it's usually been accompanied by some sort of reactionary giant move to the downside that typically doesn't last very long. And I don't know if 30K or 32K or whatever we just got to was necessarily that level. No, it very well may have been, but I've showed a lot of metrics on my channel recently, which sort of showing the realized price of Bitcoin. And if you guys don't know what realized price is, it's essentially kind of where the average price that Bitcoin is held at on the network. And what we've seen in the past is the network sort of moves down to that average price. And that makes sense because you're looking at where, at a point where the network is in general at a loss. And that's the point where the long-term holders are not willing to, that's where they start acquiring, because long-term holders or, quote unquote, smart money, they're acquiring the asset, not at the prices, 50K, 60K. They don't buy there, they're selling there. So you have retail market acquiring at those levels, the FOMO of the asset class that is so prevalent in crypto. So you have FOMO, and long-term holders are selling to those guys up at those levels. They are buying when we see anytime those same retail participants are capitulating. And they tend to do it increasingly so as it approaches their cost basis, because they have a long-term belief in the network. And, so I tend to think that we're likely going to see the price move at least closer to that realized price. And just to sort of tell you where that's at right now, where the realized price for long-term holders is at around 18K at the moment. And that lines up with a lot of other historical metrics that we've seen the price come down to, sort of in the setting of, the more severe points in the bear market, which is, like the 200-week moving average. That's sort of been a line in the sand. So a lot of these metrics suggesting where a bottom might be are kind of confluent with one another at the moment. And you're seeing them all sort of slowly rise over time. So that doesn't mean it actually has to go down to that 20K level. And in fact, I think it would likely be higher than that, because I don't think necessarily that we'll go, down to those levels right away. But everything sort of suggests that we're in more of a downtrend. So that's kind of what I'm suspecting, is that at least for, and often if you look historically, this only happens for a very short amount of time. So they tend to be the absolute best times to be acquiring the asset. So that's kind of what I'm thinking now, is that we're likely going to head lower. Now, with that all said, like you guys just alluded to, some of the volume action on this most recent move down was certainly more promising, let's say. In fact, this recent move down that we had to 34K or so, there was huge volume on that day. In fact, higher volume than we've seen, in many cases. If you go back, you'd have to go back to the summer to see that type of volume, I think, essentially. So, in fact, you guys have the trend confidence indicator, which I think is a great metric. I was just recently watching your video on that. And I think, basically that indicator to me sort of looked like it was almost taking the sort of the human side out of the technical analysis, which can often be misleading, because anytime you're doing technical analysis, it's sort of open to interpretation. Whereas if you're using something like a machine learning algorithm to analyze the data, it's not going to be emotional in any way. And to me, it looked like there was a lot of supporting evidence to suggest that we may be at least in a shorter term uptrend right now. I don't know. Do you guys have that indicator?
Yeah, I'll put it up on the screen. So here's the TCI indicator as it stands currently as of today. So for those who are unfamiliar with this indicator, it's essentially trying to gauge how confident we might want to be in a given trend that we're in. So anything above 0 is kind of a bullish side, and anything below is a kind of a more bearish side. So this is a machine learning algorithm. It basically kind of evaluates the current trend we're in, forms an expectation of what it thinks should be happening if that trend's going to continue, and then it'll kind of give you a warning if we're starting to deviate from what that trend maybe is supposed to be looking like. So we can see how it operates by looking at some historical patterns. So like coming into the spring top here, you can see the TCI is getting quite bearish quite early, actually. Even the actual top didn't even register as being bullish, suggesting that this was very much a doubtful uptrend, that we should have been very worried at the time, and then we got the big crash. But then in the summer it did the opposite, where it actually evaluated this downtrend we're in and was not very convinced by it, popped up into the green zone, which precipitated the move to the upside. And so like Jay was saying, it can kind of take the human element out of kind of evaluating these trends. Instead of us having to subjectively draw trend lines and then see when they're invalidated or validated, this is just kind of a machine learning based way of just getting a specific value to be watching. And then if we get, if the price pops above it, then that's bullish. If it pops below it, that's bearish. So right now this is looking at around 37K is kind of the critical level it's watching. It was actually notable that we did not close in the red during that kind of capitulation day that we've been talking about on the day of the invasion. We actually closed green. And obviously, this is a continuum, so it's not totally diagnostic, take it with a grain of salt, but it is just notable that in the past, recently, whenever we've closed red, notable downside has followed after that. And so in some ways, it's hopeful that we didn't actually close red here, and maybe that suggests that some more bullish moves can continue. Time will tell, of course, but certainly closing green is better than closing red. So that's something that I've been watching recently. So I'm going to stop the share.
That's useful. Yeah, thanks for sharing. mean, one of the things about the macro and talking about, economics and politics and how that affects markets is that it's really, really hard to know. We don't actually get evidence that verifies or falsifies our hypotheses about how those things are supposed to affect markets. So we're just like kind of, we're kind of in the dark about that. Probably there are important effects. It's just really hard to know what they are. Let me put one other thing out there about, where we are and whether we bottomed and what to expect, because, Mark, you lean a little bit more bullish than bearish, but you hedged it. Jay, you were sounding some bearish notes there.
Short. Definitely, I would say in the shorter term, I'm definitely bearish. But let me just lead off. I'm long-term bullish.
Okay, long-term bullish,
Yes.
short-term bearish.
Yes.
Okay, so here's the thing that I was thinking about when you were laying out your bearish case, which is purely on the technical side of things. I'm going to pull up just Bitcoin's daily price chart here and show you guys a channel that I've been watching. And so here's this channel. This is a daily Bitcoin price chart, and I drew this channel starting back at the end of January 2021, after Bitcoin had made its first impulse up to about 40K, and then it retraced down to about 29K, where it bottomed, and then it went back into its move and formed that distribution top. You guys can see, you remember how a lot of this played out. But what seems pretty clear from looking at this chart is that the price action over the past 13 months has conformed to this uptrend, this channel, very closely. And so if you're just looking at this chart, you can take into account the volume if you'd like to, but if you're really just looking at the price action here, I think what you would probably conclude is that we touched the bottom of the channel and we bounced off it. And now we're sitting, in the lower range of the channel. And you want to go long when you're in the lower range of the channel, and you want to go short when you're in the top range of the channel. And so until we break down below this channel, it seems like we're trending on the macro scale. It's felt very bearish since November, because we've been in a more micro downtrend, but that fractal fits within this broader context, which I think lends itself more easily to a bullish interpretation. So I'd be curious to hear what you guys think about that. How you would weigh this information, because when I look at this, it's telling me to accumulate, and it's telling me to expect further upside. And I wonder if all the things that are going on in the world and all the uncertainty about it can sometimes distract us from kind of straightforward readings of the chart. So I'm going to stop sharing my screen now and turn it over to you, Jay, because you had a very different perspective, which is coming from on-chain data, which is obviously a different source of information. So how did you think about this bull case?
Yeah, so let me start by saying, there's a couple things to unpack here. First of all, when I say short term, I think my definition of short term is different than most people's definition of short term. I'm kind of looking 5 or 10 years down the road. So when I'm thinking long term, that's kind of what I'm referring to. And when I'm saying short term, I'm talking about the months, even up to a year, kind of that range. So I'm seeing right now, first of all, I think it's certainly possible that we don't go down to those levels that I'm talking about. And even if we did, I think you have more players in the game now. You have like Michael Saylor, for instance. That's just one name amongst many other big names that you don't know about, that you don't hear about because they're not, making YouTube videos and going on every channel that they can possibly go on and giving interviews about Bitcoin. You do have a lot of those people in the game now. And that does change the complexity of the asset class. So once you have those people, then, maybe they're not going to wait until Bitcoin goes down to the 200-week moving average, maybe. So maybe they start buying at 25K or 30K. Like we saw, there was a lot of speculation that when we went down to 32K, what was it, in the end of January, or maybe the first week of February, that was a Michael Saylor wallet that bought a ton of Bitcoin at 32K. So I do think you have that now, which may prevent us from going down to those lower levels. And all of this to me is sort of almost a moot point, because I'm acquiring the asset, when we're in the lower ranges like we're in right now, using a dynamic dollar cost averaging strategy, regardless of whether we're at 20K or, in the 30s. And I don't know exactly the level where I would stop acquiring. I kind of use the risk metrics to guide that, because they're non-emotional. They could care less about, or could not care less about, where the price is at, what's happening with COVID, what's happening with, what's happening in terms of global conflicts. They don't care about that information. They only look at the price data historically, and, using a broad range of different markets to sort of determine what is likely to happen. And, that could also technically be a knock against the indicators, because they don't know what's going on in the world. So if global communication systems were knocked out, basically that would sort of be an invalidating case for digital assets if you were no longer able to trade them. And the model wouldn't know that. It would continue to value it the same, regardless. So
you don't model the risk of a solar flare?
I forgot. Nor does it model alien invasion. But so I just want to put that out there. While I am more bearish in the shorter term, I'm still bullish in that I'm acquiring the asset. I dollar cost average every Friday, and anyone who watches my channel knows that. I talk about that all the time. Friday, no matter what's happening, unless the market, or unless the risk indicator suggests that it's above that 50 level, and then I start dollar cost averaging out of the market. And that's kind of what you see as a trend for longer term holders. They are buying in the lower prices all the time. You see long-term holders buying at these lower prices like we're at right now, because regardless of whether we're at an uptrend or whether we're in a downtrend, we are at lower prices historically compared to what our upper level is. Imagine at 20K back in 2018, if you were buying at 10K, you weren't too sad when 3 years later it was trading at 60K, right? So that's kind of how I'm approaching it. Now, with that said, just to sort of give some supporting evidence, in addition to just a simple 200-week moving average, I could show why why I'm kind of coming from the camp that this are you guys able to see the screen? Okay.
Yep.
Okay. So what we're looking at here is active addresses on the network, and a lot of people sort of shoo away on-chain metrics and say that they don't mean anything, they're useless. And I would contend that anyone who's saying that just doesn't understand what they're looking at, or just hasn't had enough exposure to them yet. You don't see a lot of TA people on on YouTube or wherever talking about on-chain metrics, simply for the fact that a lot of these guys are coming from traditional equities markets type analysis. But what you're seeing with on-chain metrics are a level of analysis that you literally would be getting as a hedge fund, let's say, for a traditional company. You're seeing intimate details of the network, or you could think of it, imagine it as a company. You're seeing the information, the exact information for the company that you're looking at. And that's just, as a retail investor, you typically don't have that level of information just as a simple investor. You need, these are billion-dollar companies that typically get this kind of information. But with crypto, since we have the ledger, you're able to see exactly what's going on with the network. And what we see is, if we just go back to, all the way back in time here, this is the in orange, you have the active users on the network, and in white, you have the price of Bitcoin. You see that as the price of Bitcoin goes up over time, in white again, we're seeing that is always driven by an increase in active users. In fact, we have these parabolic peaks that occur even in the number of active users. So here, and even if I removed the price, you would know exactly where we're looking at. You could infer that we're looking at 2018, or late 2017, early 2018. You could infer that this is probably 2019 here, when we had this mini peak, and then this is obviously 2020 now, or 2020 into 2021. Now what you've seen is just a constant increase in the number of users over time. Okay, what we saw that was unique was right here at late 2020, early 2021, we went and made a new high in the active users. Now, it didn't have this type of reactionary, massive spike for just a few days like we saw back in 2018 and late 2017. It was more of a slow increase. But then what you saw was when Tesla announced that they were going to be no longer accepting Bitcoin as a method of payment. At the same time, China was announcing that they're going to be banning crypto. That was a shock to the market. And you saw the number of active users on the network just plummet. Okay, so dropping from around 1.2 million all the way down to around 850,000. Now that has been increasing, but notice this increase that, we only went up back to around 990,000. Where back at our peak here, we were at a pretty consistent, up to around 1.2 million. And that was unique. We've never seen a place where the users on the network, or you could think of them as customers, you could think of this as customers to a store over time. As it increases, obviously your sales are going to be increasing, right? If you're coming from stocks. But for Bitcoin, we're looking at how many people are transacting on the network. And we saw this place where this reached this peak back here with this high price. And for the first time ever in Bitcoin's history, it made a new all-time high with less users, but not just a few less users. It was massively less. We're talking about almost over 20% here, less users on the network. So I think there's, different ways you could look at this. Obviously, we talk about manipulation a lot, which is a word that I generally like to stay away from. But I think you had people, this is sort of perhaps putting a tinfoil hat on, but you had billionaires in China who are being told by the government, you're no longer allowed to, have crypto. You need to get rid of your crypto, or else. And who knows? I'm not from China, and again, this all you're speculating on something that you have imperfect information about. But I kind of saw this entire move here as sort of a manufactured move, let's say, because you have, and then just to show this as well, this is the price volume of Bitcoin. So price volume is simply the price multiplied by the volume. It gives you an idea of how many dollars are actually being traded on the asset. And again, just like with users on the network, you generally see this metric increasing along with the price. When this is falling, the price is typically bearish. Okay, now we're looking at a logarithmic scale, so this may not look like a large increase, but we're talking about, many-fold increase. In fact, if we just measure it here, if you go back to 2011, for instance, we have multi-million% increase in the dollars being transacted. And what we've seen is when the price hits a new all-time high, we generally see spikes in the amount of dollars being transacted on the network. But what we saw in this instance was actually a massively decreased amount of volume. In fact, if you go back from January or even February to our peak, the volume was down around 52%. And currently the volume is down, or the dollars being transacted on the network is down around 70%. In fact, it's been over time trending down even since November. So to me, there's a lot of things to suggest that this move is not the same type of build up. Even in these prior cycles, you've seen this pretty consistently increasing. Now, this does increase at times of capitulation as well. because obviously if more people are selling their asset, the price volume will increase as well. But there's a lot of things to suggest that, this is sort of maybe not what it seems. Now, I could be completely off about that, but that's kind of where I'm standing at the moment.
I think you make a really persuasive case that, the move since
Oh, let me
July
stop. Let me.
2021.
Sorry.
That's great. You can leave either way.
Okay, sorry.
Yeah, I think you make a really persuasive case that the move we've seen since July of 2021 was not supported by the kinds of, by the level of transacting that you would want to see for a sustained move, and other signs that was kind of a half-assed move that really was not convincing. But what about now? So we've retraced that move for the most part, and so how do you translate that into the future? That reflects that a lot of people got fooled over the past 8-10 months. Does it also, though, the fact that we haven't seen the number of wallets or the dollar value that's being transacted recover, does that indicate that we haven't bottomed yet? Or is it possible that this is kind of what you would expect to see at a bottom? All of the retail interest is drained out of the market. A lot of people have just left behind. A lot of the short-term holders have given up on their dreams of getting rich in crypto, and the only people left are high conviction people. So is it possible to tell a convincing story that makes that look like a bottom? Clearly the divergences are there over the past period, but what does that mean going forward, do you think?
Yeah, I mean, I think I don't know. From my perspective at the moment, the economic situation doesn't seem to becoming, it's not becoming rosier as we as we move forward. And maybe I think it's easy to, I guess everything I do is all about, and I think probably with you guys as well, that's the whole point of having these sort of indicators and using metrics and using models. It's to remove emotions, pulling your emotional state about what's going on, about the news, pulling that out of your thought process. So everything I'm saying right now may be just being sort of a recency bias based on all the things that are happening right now. But I kind of feel like it's difficult to suggest, at least for me, that we're at a bottom right now when the kind of the metrics that I use to judge the the state of the Bitcoin or the asset class, they're all suggesting things are trending down, while we're seeing over time, like you said, price trending up. Something has to give one way or the other, and I tend to think it's easier for price to give than it is for momentum shifts in terms of interest in the asset, especially when the price isn't. It's easy to create a state of FOMO when the price is rocketing up 400, 500, 600%. It's harder when you're asking the same people that were just watching or we're just investing in Dogecoin ever since it was at 60 cents as it's now trading at 10 cents. It's harder to get those people to come back and start investing again, which is what you need essentially to get these parabolic runs. At least, I think we're right on. Let's put it this way. This is what I would say. We're right on track in terms of a nice, smooth growth curve. But what people like about crypto are not the nice, smooth growth curves. They're the points where everyone and their mom, quite literally, is investing in crypto, and those are where you get these parabolic peaks. But all of those people just finished getting wrecked for the last 8 months, so I think you're going to have a hard time getting them to come back, at least right away.
Yeah, I mean, wouldn't it be interesting if we just see this channel extend 5 years into the future and we just keep on? I
could definitely see that happening. I think that is completely within, plus or minus whatever amount of percent you want to say, but I think it's completely within the realm of possibility that's exactly what we do. We kind of move right along it. At the end of the day, we're talking about crypto here. The difference between 32K and whatever I was suggesting, at very worst 20K, say you go down to 25K, it might sound a lot if you're coming from equities, but in terms of crypto, that's a Wednesday. Quite literally. In fact, what a Thursday was an exact percentage move that we're just referencing there.
Thursday was a wild, wild day.
Yeah, exactly.
It wasn't the biggest drawdown or the most volatile day that Bitcoin has seen over the past year or two, but it had like a special quality of uncertainty, I think, because of what was going on in the world, and maybe like how that seemed to challenge people's assumptions about stability and about what's possible right now. So I don't know. It felt like almost like a qualitatively different kind of uncertainty. We've been in an uncertain period since November, but this is something new.
I think just think about what you just said there. It wasn't the most volatile day in the last year and a half. In fact, it probably wasn't even in the top 2 or 3. That's what we're dealing with here. We're just dealing with an asset that can, and like I said, even if it does go down to those 20Ks, I think it will be for an instant, and it will be a premium buying opportunity. So.
And one other thing I just want to throw here that I think is relevant to this discussion is the idea of sentiment to some degree, and not just in crypto, but also in the broader equities market. And the reason I bring this up is that one of the things that's kind of interesting right now is that everyone is overwhelmingly bearish in just the broader markets. There are surveys that are done regularly looking at sentiment about the stock market, and we're at pretty much historical lows right now, or very close to it. To the point actually where these kind of levels have historically generally yielded decent returns if you invest at those points, because usually the market doesn't do the same thing. So that's one data point that is speaking a little bit to at least a local bottom, if not the bottom. So certainly it's possible that we could catch a dead cat bounce from here, go back up to 50K, and then collapse from there. But looking at the equities market, one of the things that it will be interesting to watch is, rarely is it the case that the market will reward the majority of people who all expect one thing to happen, right? If everyone's short on the stock market, it's pretty unexpected for the market just to give them what they want and let all those short sellers just profit and everyone be happy. Usually the market kind of pushes against where everyone thinks it's going to go. And I think the same thing is happening to some degree in the crypto sentiment as well. Like with Thursday, the fear and greed index dropped pretty, I think it dropped by like 25 points or something from where it had been in that more recent run up into the mid 40Ks, which frankly is something I saw as being a bullish thing to some degree, because an uptrend is going to be more sustainable the longer there's disbelief. The more that people disbelieve an uptrend, the longer it can sustain usually, because when people are dumping in leverage, they'll be doing it on the short side just as much as maybe on the long side, so you don't get those big, leverage flushes that push you back down again. So in some ways, that's been another hopeful sign for me, is that the fact that we are in such a bearish condition, and yet price has kind of found at least some local bottom, might possibly set us up for some kind of a short squeeze, which would be, that can be the thing that, like in the summer, pushes you up and gets at least some interest back into the space to bring people back in and push price higher. Because another alternative way of interpreting the kind of the active users data is certainly it's not bullish right now, but what it could mean is that there are a lot of people on the sideline who could get interested should things turn around a bit. And so especially if equities markets suddenly went on a rally, if there's a big short squeeze in the equities markets that then trickled into more risk on assets like crypto, maybe then other people decide to jump on and it could be a bullish thing. Now, obviously that's just all pure speculation, but just to put out ideas of things that if we were to see some kind of meaningful uptrend, that's one thing that I think is plausible that could catalyze it, where if we suddenly see a relief of this bearishness in the broader markets, then that could also lead to relief in the crypto markets that could move us higher. So just another data point I thought was relevant there.
Yeah, there are a lot of stable coins sitting on the sidelines right now. So that's consistent with what you're saying.
Yeah, I personally have all of my money that I have just sitting on the sidelines. It's all in DeFi, just earning, having it just sit there is not doing anything. It's just losing value doing that. So it's all just, like you said, just sitting there in DeFi. But, and just, to speak about what you just said, if I could just show this again real quick. because I think this sort of reflects what Mark just said. Notice these active users, they usually hit pretty low, close to the bottom. In fact, usually a bit above, right wherever the bottom is. The bottom usually occurs exactly right after a huge reactionary move to the downside. But the active users are usually pretty close to the bottom, right when you start to move up into the next uptrend. And, so there's a case to be made that that's kind of what you're seeing right now. We're down at this really low level. A lot of people have left the market. And like they said, these tend to be the best times to be getting in. So while I'm bearish in terms of price action at the moment, that's completely opposite in terms of my sentiment towards should you be buying right now, because I think now is just an excellent time to be buying. So and even more so if we do go down more.
I think that's a great message to finish our conversation on, because I know that we're running out of time, and that's kind of a clear summary, I think, of a lot of what we've covered. So before we wrap up, thanks everyone for tuning in. Thank you both for sharing your ideas and insights. For everyone who's interested, keep your ear to the ground. We're going to keep you updated about the website, which is coming. That'll be a way to get our risk indicators and other data at your fingertips. And also, we're going to announce a short survey that if you fill out sometime in this next week, you'll be able to get access to the upside downside potential indicator for Bitcoin and Ethereum to tide you over while we finish building this website. So I think that's all we have for you guys. Anything else from the two of you before we wrap up?
I have one last question. Serious question. 6 months from now, where do you guys see the price? To put you on the spot.
Ranging, somewhere in the range.
In that channel that you showed?
This is not a super high confidence.
Yeah, no, we're just
I don't think that an all-time high is super likely, although I would be happy to be wrong about that. And again, not a super high confidence prediction that it won't come, but I would be pretty surprised if we spend time much lower than we are now. If we do wick down into the 20s, like you said, I think it'll be quick. Yeah. I would expect to see the price somewhere between 40 and 60K if I had to guess.
Yeah, if we ever get to the 20s, I'll probably even step out of my DCA range and buy more than I normally do. So
it's time to back up the trucks and load up everything you can get at those levels.
Yeah, exactly.
Right.
Yeah.
Yeah, I would say a similar thing to what Joe was saying is that, I wouldn't actually be totally surprised if we could put in a new all-time high. I just wouldn't necessarily expect it to be a parabolic run to some crazy high valuation in that short of a time frame. Kind of my base case is, or if we do keep moving up in a bullish way, I kind of would expect a more higher low, higher high, higher low kind of a structure that might lead us into somewhere in the ballpark about 50K or so might be my guess.
Yeah, I think that's probably reasonable, or who knows, but like you said, it's tough to give a sort of a loaded question, but it's tough to give an exact answer. But I definitely think that range that you showed is a fair estimation of where we may be, plus or minus.
What's the percentage on a parabola? Like, give a percentage on six-figure Bitcoin in 2022.
Oh, 0.
Mark?
I'm not going to go quite that low. I might put it at like 20%. I'm actually, I think it would, if the stock market suddenly decided it was not going to be bearish anymore, I think anything is possible.
It's always an advantage to go last in these kind of projection rounds. So
say 10.
1%.
21. Okay. Yeah, I don't know about 0, but I would certainly put it at less than 5%.
You heard it here, folks. You heard it here first. All right. Well, thanks for tuning in. Good talking with you both. Looking forward to doing this again sometime soon.
All right. See you.
Take care, everyone. All right. Let me